Hello, everybody. Welcome to Wednesday. The S&P 500 was down a grand total of 0.02% today, a little bit like yesterday, kind of flat. Did open up down, but we came back all day, all the way back to almost zero. So pretty good day in the end. Again, I think one of the things that's happening right now is that earnings are coming out at a little bit higher than expected rate. So for example, Tesla just reported here after hours, and they beat their earnings expectations. The stock is up a little bit over 4% as we speak in the after hours. We'll see what happens tomorrow. But certainly the expectation amongst the investment community was that these first quarter earnings reports would be maybe missing their mark and or talking about, worse things to come in the future. That hasn't happened so far. We still have quite a ways to go. And I think one of the things we have to be careful of here is that when we are studying the market, we're looking at prior times where we had recessions or downturns and those types of things, and we get patterns that we want to look at. And we can usually rely on those patterns because they're a representation of human emotion, which hasn't changed, in the last 50 years. And so the difference here is that this includes a pandemic, which is not in the data set, say, since World War II or whatever we're looking at. And this pandemic has created this kind of pent up demand and this very interesting scenario where we've got inflation that's caused by these supply chain shortages. And compared to that pent up demand, as people come out and start to spend, we have China potentially coming out of their COVID lockdowns and what have you. And of course, they're going to be, slow to get back in, but they're a huge economy that could really drive things forward. And so there are things that are happening here that aren't normal in a normal recession. And so we see a lot of these big institutions kind of talking about things as if the pandemic didn't exist, in my opinion. And so maybe we end up having a better earnings season because there is still people out there willing to spend money, willing to borrow, willing to do the things they need to do to keep things going, just because, again, they were locked up for a period of time and want to go out and do things, especially in the area of services. So we'll see how that plays out. Looking forward to seeing what's going to happen tomorrow. Lots of earnings reports happening here over these 2-week period here. So look forward to talking to you about that tomorrow. I'll talk to you then. Thank you.